Home prices remain at record highs, but the market may not be as strong as prices are indicating. In today's video, we're going to look at the cracks developing in the housing market and what we can expect in the months ahead. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate analysis for the U.S. and regional markets. If you're new to the channel, my name is Eric and I am a professional economist in addition to being a licensed real estate agent, so I can bring you a unique perspective that you'll be hard-pressed to find on other YouTube channels. We're looking at the U.S. housing market today, and while prices are at record highs, there are some worrying trends developing that I'm keeping a close eye on. According to Redfin, a national real estate brokerage, the median price in the U.S. was $424,000 in May, unchanged from April on a seasonally adjusted basis. This is the highest the U.S. median price has ever been, and compared to a year prior is up 5.2%. If this was the only chart we looked at today, you would think that everything's looking great, no problems at all. But as I mentioned before, there are some worrying trends developing. Perhaps one of the most concerning is the percentage of homes that have reduced their listing price. As of May, it stood at 20.2%, which is the highest it's ever been since Redfin began collecting this data in 2012. This is also the 10th month in a row it has been trending higher. This isn't that surprising, however, given where affordability is right now. The average housing payment as a percent of median household income was 40.5%, down slightly from its recent peak, but is still at record high levels. The government considers a household to be cost burdened when housing makes up 30% of income, and we've been beyond that level for more than 2 years now. We're also seeing homes stay on the market longer. As of May, the average days a home was on the market before selling was 39, a continuation in the uptrend we've seen since November of last year. The sales to list price ratio is 99 in May, the third consecutive monthly decline and below the critical level of 100, meaning homes are selling below list price on average. Given the affordability challenges buyers are facing, at some point something has got to give, and we're starting to see it in the form of listing price reductions, longer days on the market, and final sales prices coming in below the list price on average. This begs the question, why haven't we seen the median price falling given the weakness on the demand side of the market? The answer to that is no secret. Supply is just too tight right now, but that might be changing as well. New listings ticked up in May, and aside from a bit of volatility along the way, we're seeing a solid uptrend forming here as well. We're still well below pre-pandemic levels, but if this uptrend continues, it will definitely put downward pressure on prices, especially if sales volumes remain low. Home sales have likely reached their lowest level and are trending sideways for the most part. If sales remain at this level and new listings increase, we're going to see a rise in inventory, eliminating the tight supply that has kept prices elevated. The trends we're seeing in price reductions, days on market, and sales to list price ratio confirm that demand is weak and getting weaker. With prices where they are now, the only relief buyers could get would be from a reduction in mortgage rates, but that's not likely to come anytime soon. In my recent mortgage rate outlook video, I pointed out that we might only see 1/4 point rate cut from the Federal Reserve this year, and September would be the earliest that it would likely happen. But that is going to depend heavily on the inflation reports we get for July and September before the Fed's meeting. On the supply side, we're seeing it loosen up a bit as new listings are trending higher. If all these trends continue as they have been, we're likely to start seeing some weakness in the median home price as well. Over the next few months, we could see the median home price head lower, but I don't think it will be too much lower, certainly not a sudden crash. We'd have to have a sudden increase in new listings to bring down prices in rapid fashion, and I just don't see anything causing that in the months ahead. It's important to remember, however, that housing market crashes don't happen overnight. They take time to play out. The last housing market crash took years to play out. I'll be providing an update on the U.S. housing market each month as the data comes in, so if you want to stay on top of all the developments and where the trends are headed, Make sure you're subscribed to this channel and hit that notification bell down below so you won't miss my next housing market update or other videos as they come out. And if you found this video useful or at least mildly entertaining, make sure to hit that like button on your way out to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.